Today we are going to see chapter number 4, Journal of Standard 11 Commerce, subject account. Today we are going to see all the transactions together. That means whatever the transaction we have seen today, that transaction all to combine we are going to see today. And this is the 12th part of the video. First to 11th part is already linked in the description. And for that, here is your sum. From the following transaction, write a journal in the books of Sri Rajvi. So, journal entry in the journal of Sri Rajvi. Journal entry in the books of Sri Rajvi. So here example number 12, and let's prepare journal. Date, particular, ledger folio number, debit rupees, credit rupees. So here the date is a 2014 August 1st. So, 2014 August 1st, and a business is commenced with introduction of cash rupees 50,000, receivable of 25,000, liability of 10,000, and stock of goods of rupees 15,000. So here cash account, debtors account, and stock account is going to be debit, and liability account, that is creditor, is going to be credit, and balancing amount we are going to take to the capital account. So journal entry will be cash account debit of 50,000, receivable means debtors account debit of rupees 25,000. Then stock of goods account debit of rupees 15,000 to creditors account, that is creditors is of 10,000, and balancing amount we are going to take to the capital account. So to capital account. So here 90 minus 10, it will be 80,000. So 80,000 we are going to take to the capital account. Being to commence business, cash of rupees 50,000, debtors of rupees 25,000, stock of rupees 15,000, and creditors of rupees 10,000 brought. So this was the first journal entry. Now, a 10% loan of rupees 30,000 borrowed from Srimati. So here we have borrowed loan from Srimati. So for that, cash is going to come in the business. So cash account debit to Srimati's loan. That journal entry is supposed to be passed. Cash account debit to 10% Srimati's loan. account. So here the amount is a 30,000. Being a loan of rupees 30,000 borrowed from Srimati. So now let's see the next. Laptop purchased from Jaipur for cash rupees 20,000 and paid other expense 500. For that, laptop is going to come in the business. So laptop account debit to cash account credit, and the journal entry will be passed by 20,500. So third, laptop account debit to cash account. In total will be 20,500. 20,500 being a laptop of rupees 20,000 purchased. Now let's see the next transaction. Open bank account with Dena Bank by depositing rupees 15,000. So we have opened the account, for that given the cash. So cash is going out of the business. Cash account is going to be credit and bank account is going to be debit. So journal entry will be Dena Bank account debit to cash account. Dena Bank account debit to cash account, and it will be 15,000. Being a bank account is opened by depositing rupees 15,000. Now let's see the next transaction. Goods of rupees 30,000 purchased from Royal Stores on credit of 10% trade discount. Royal Stores paid railway freight 2,000 and wages 1,000 on behalf of us. So here we have purchased goods and 10% trade discount. So we have purchased the goods of 27,000. 30,000 minus 3,000. So 27,000, and Royal Stores has paid on behalf of us 2,000 and 1,000. So here purchase account debit to Royal Stores account. So that journal entry supposed to be passed. So here fifth journal entry will be purchase account debit. Then railway freight is our expense. So railway freight account debit. Then wages account debit to Royal Stores account. So here our purchase is of 27,000 and railway freight is 2,000 and wages is 1,000. Total amount is 30,000 that we supposed to pay to Royal Stores, being goods of rupees 30,000 purchased at 10% trade discount and railway freight wages are paid by Royal Stores on behalf of us. So that was the fifth date. Now let's see The sixth, goods purchased from royal traders, out of which goods of rupees 15,000 sold to Bhagwati at 10% trade discount after adding 20% profit on it. Railway freight 1,000 and wages 500 on behalf them. So here we have sold the goods, and for that we have to pass the journal entry. Let's prepare journal first. Date, particular, ledger folio, debit, rupees, credit rupees. So here we have sold the goods to Bhagwati of rupees 15,000. So on 15,000, 20% profit, that will be 3,000, and that 3,000 we are going to add to 15,000, that will be 18,000, and 10% trade discount. So that will be, the goods will be of 16,200. Here we are going to pass the journal entry. That journal entry will be Bhagwati account debit. Sales account to cash account. So here we have sold the goods of rupees 16,200, and on behalf of them we have paid 1,500 expenses. So here the total amount will be 17,700, being goods of rupees 15,000 sold to Bhagwati at 20% profit and 10% trade discount. That's it. Now let's see the next transaction. Next transaction is goods of rupees 50,000 purchased from Kruti at 10% trade discount and 10% cash discount. How amount is paid by check. So here again we have purchased the goods. It is of 50,000. 10% of 50,000 will be 5,000. So goods purchase of rupees 45,000, and half of that we have paid cash. That means 2250 on 22,050 we are going to get the cash discount on it. So let's pass the journal entry. So here the journal entry will be purchase account debit. To Kruti account. To here we have given the check. See, so to bank account and to cash discount account. So here purchase is of rupees 45,000. Half amount we have paid the by check. So here 22,500, on that we are going to get the discount of 2250. So the amount will be 20,250 that we are going to pay by bank, being goods of rupees 50,000 purchased on 10% trade discount and 10% cash discount. Half amount paid by bank. So that was the transaction. Now let's see the 8. Goods sold to Bhagwati returned back of rupees 540. So 8 number that will be first transaction, and that is of sales return. So we have sold the goods to Bhagwati. From that, for the goods of rupees 540 return back. So sales return account debit to Bhagwati. That journal entry supposed to be pass. Sales return account debit to Bhagwati. How much? 540. 540. Being goods of rupees 540 returned by Bhagwati. Now, in the same transaction, there is a second transaction, and that is the goods that is returned by Bhagwati that we have returned to Royal Stores. So here, in this, the profit portion is there. So that profit portion we have to find out. So for that, let's make the journal entry. Then we are going to calculate the amount for that. So here, this is a now we are going to pass the journal entry for the purchase return, and for that the journal entry for the purchase return will be here. We have purchased the goods from the goods from the Royal Stores. So Royal Stores account debit to purchase return account. And here, as we know that the being in that, we can see that the goods is of 540 and that is of how much? So we can see that that is at the this goods is of 108. The sales price is, if the goods is of rupees 100, then the sales price is 108. Then if the goods is of rupees 540, how much the selling the cost will be? So that cost is rupees 500. So here our goods is of rupees 500 that we are going to return back to the Royal Stores. So this is the calculation for the 500, because we can see that the goods of rupees 100, on that we have add the profit of 20% and then we have deduct the trade discount. So the amount is 108. That 108 is equal to the 540. And now we have to find out the cost, and that cost will be 500. And here we are going to write the goods returned to Bhagwati. Goods returned to Royal Stores. So that was the calculation of the 500. Now let's see the next ninth number. Goods of rupees 15,000 after adding 20% profit sold to Nirali at 10% trade discount and 10% cash discount. Half amount received in cash. So here again we can see that we have sold the goods of rupees 15,000. So 20% of that will be 18,000 and we are going to deduct the trade discount. So goods will be of 16,200. So here it is the journal entry is for the sales, and for that the first we are going to do is the sales account is going to be credit. So Nirali account debit, cash account debit, cash discount account debit to Nirali account. That journal entry we are going to pass. So here we can see that Nirali account debit, then cash account debit, cash discount account debit, to sales account. Here total amount is 16,200 and half of them will be 8,100, and from that we can see see that 7290 and 810. This is the amount that we are going to get from the Nirali. 7290 and 810 rupees we are going to give her discount. Being goods of rupees 15,000 sold to Nirali at 20% profit, at 10% trade discount and 10% cash discount. So this was the transaction. Now let's see the next transaction, and next transaction is of date 10. So for 10, Bhumik goods of rupees 20,000 after adding 30% profit sold to Bhumik at 10% trade discount and 10% cash discount. So 30% of 20,000 will be 6,000. So we have sold the goods of rupees 26,000 and 10% trade discount will be 2,600. So from 26,000 we are going to deduct 2,600, and here there is no need to find out cash discount as cash is not received here. So for that, Bhumik account debit to sales. Account, and the amount will be 23,400. Being goods of rupees 20,000 sold to Bhumik at 20% profit. So student, you may note down this in your notebook. Then we are going to see some more transaction of this. Date 11. Paid rupees 1,500 for advertisement bill of Gujarat Samachar. So here advertisement expense account debit to cash. To cash account, and the amount is a 1,500. Being a bill of advertisement paid. So that now next transaction is received personal dividend of rupees 800 which is deposited to Bank of Business. So here the dividend is personal dividend which we have taken to the business. So whatever the personal asset we are taking to the business is a capital. So here we are going to write that capital account is going to be credit, and here we are receiving in a bank. So bank account debit. So bank account debit to capital. That journal entry we are going to pass. And that is of 800. Being a dividend of rupees 800 received in business account which was personal. So personal dividend we have received in a business account. Now let's see the date number 13. Nirali returned the goods of rupees 650. So see, here we have sold the goods to Nirali, that is received back. So here self-return account debit to Nirali, that journal entry we are going to pass. Self-return account debit to Nirali account, and amount will be 650, being goods of rupees 650 returned by Nirali. Now let's see the next transaction is date number 14. Goods of rupees 400 received as a free sample which was distributed to customer in a free for advertisement. So here goods we have received in free and we have given for free. So for that it is a non-economic transaction because no cash is, no money is in between in this transaction. So for date 14 it is non-economic transaction. It is non-economic transaction. So that was date number 14. Now let's see date 15. A check of half amount is received from Bomik and cash discount allowed. So here Bomik has taken the goods of 23,400. From that he has given the half amount. So half amount of that will be 11,700 and we have given the discount of 1170 rupees. So for that the journal entry that we are going to pass for the date number 15, it will be bank account debit because he has given us check and check will be of how much? So check will be of 10,530 as we have given him discount of rupees 1170. So that will be cash discount account debit to Bomik account and it will be 11,700 being half amount paid by Bomik for which 10% trade discount or 10% cash discount is given. So that will be the date number 15. Now let's see goods returned by Nirali sent to Kruti. So here on 16 that whatever the goods that we have received from Nirali that we have sent back to Kruti. So from this we have to take out the profit portion and for that we have to make the calculation. So that we are going to see for that the journal entry will be Kruti account debit to purchase return account and here see 650 is equivalent to 108. So here we can write that in a being that 650 into 100 upon 108. So the amount of the amount will be 602 approximately. It is a 601 point dash. So it will be 602. That amount we have to return to the Kruti being goods returned to Kruti, purchase returned to Kruti, goods of rupees 602 returned to Kruti. So that will be the journal entry that will be supposed to be passed. Now let's see the 17. A machine purchase of rupees 7,000 and paid rupees 500 for installation of machine. So here we have purchased the machine of rupees 7,000. So machine account is going to be debit to cash account. That journal entry we are going to pass. Machine account debit to cash account, and the amount will be 7,500. 7,500 being a machine of rupees 7,000 purchased, and installation expense of rupees 500 paid. So that was the date number 17. Now let's see the date number 18. So for 18, goods of rupees 300 received as a free sample. So these goods we have received as a free sample. So for that it is a non-economic transaction and we are not going to record in the books of account. So this is a non-economic transaction. And for the date number 19, after deducting 100 discount check issued to Royal Traders as a final settlement. So here we can see that we have purchased the goods from the Royal Traders, and for that we are paying them, and here we know that we have purchased the goods of rupees 27,000, and in that we have added railway freight and wages of rupees 3,000. So we are supposed to pay them 30,000, and from 30,000 we know that 500 goods we have returned to them. So it will be 29,500, and from that we are taking the discount of rupees 100. So we are going to pay them 29,400. So here journal entry that we are going to pass, Royal Stores account debit to, here we are paying them by bank. So to bank account, to discount account. So 29,500 and 100 rupees will be discount. So we are going to pay them 29,400. Being for final settlement, rupees 29,400 paid to Royal Stores. So this will be the journal entry for this. And now let's see the next transaction. Nirali deducted allowance rupees 50 and settled the account. So here we have sold the goods to Nirali, and for that she has also settled her account. For Nirali we have to take from her rupees 7,450. So from that she has paid only 7,400. So here cash account debit, here discount account debit to Nirali account. So for that here 7,400, here 50, and here 7,450. So here being Nirali settled her account by paying rupees 7,400. She is supposed to pay us 7,450, but she has paid us 7,400. Now let's see the next transaction. On 21st, on account Bhomik paid cash of rupees 5,000 and issued check for remaining balance and settle the account. So for Bhomik is supposed to pay us 11,700. From that he has given the 5,000 cash. So here cash account debit, bank account debit to Bhumik account. So here he has paid 5,000 cash and will balance will be how much? 11,700 minus 5,000. So balance will be 6,700 that he is going to pay by the check. And here being Bhumik settled her account, his account. Bhumik settled his account by paying rupees 5,000 cash and balance by check. So that is. Now let's see the next. It is of 22. Goods of rupees 4,000 destroyed by fire and insurance company admitted claim of rupees 3,000 and 200 realized from the sale of destroyed goods. So here the goods of rupees 4,000 destroyed. So purchase account is going to be credit by 4,000 and from that insurance company will pay 3,000. So insurance company account debit 3,000, cash account debit 200 and balancing amount we are going to take to the loss account. So here on 22 insurance company account debit, cash account debit, loss due to fire account debit to purchase account. Here we have lost the goods of rupees 4,000. From the insurance company is paying us 3,000. 200 we have realized. So balancing 800, that is our loss and that is loss due to fire. Being goods of rupees 4,000 destroyed by fire, for which rupees 3,000 admitted by insurance company and 200 realized from scrap. So that's it. Now let's see the next transaction, that is of date 23. Here they are telling us that to earn the profit of rupees 20% profit on selling price, goods of rupees 5,000 sold. So here this, we are earning profit on selling price. So we need to count, but before that let's pass the journal entry. So journal entry will be here cash account debit to sales. That journal entry we are going to pass, cash account debit to sales account, and that will be here in the being we can count that the 100 rupees is selling price. So cost price is rupees 80, and here if the cost is at 80, so 5,000 into 100 upon 80. This is how we supposed to find out the amount, and that amount will be 6250. 6250, and here goods of rupees 5,000 sold. Goods of rupees 5,000 sold by adding profit. So student, you may note down this, then we are going to see the remaining transaction. 24. Interest for 1 month paid on loan of Srimati. So here we are going to pay the interest. So interest on loan account debit to cash. That journal entry we are going to pass. And amount we have to find out. Interest on loan account debit to cash account. Here the loan we have taken from the Srimati is of rupees 30,000. So calculation will be 30,000 and it is how much? 10% loan, and we are going to pay him interest of rupees 1 month. Okay, so for the 1 month that will be 1 upon 12. So this amount we have to calculate the amount of this, and that amount we are going to pay to the Srimati will be, it will be the amount that we are going to pay to the Srimati will be the 250. Here 250 we are going to pay to the Srimati. Being interest paid on loan of Srimati. Now let's see the next transaction, and next transaction is of 25, goods destroyed in railway accident. So here loss due to accident account debit to purchase. The journal entry is supposed to be pass. Loss of goods due to accident account debit to purchase account, and the amount will be 2,500. Being goods of rupees 2,000, goods of rupees 2,500 destroyed due to railway accident. Okay, so that will be the transaction. Now let's see the next. Rupees 50 share of Adani Power Limited purchase at market price 300 per share, and 2% brokerage include amount paid by check. So here we have made the investment in a Adani. So investment of Adani Power account debit. The journal entry that we are supposed to pass is investment of Adani Power Limited account debit to bank account, and the amount will be 50 rupees into 300, that will be 15,000, and on that brokerage is 2%. So 2% of 15,000, that will be 300. So amount will be 15,300. Being share of Adani Power Limited purchased, and 2% brokerage paid. Say for that. Now let's see 27. A computer of business of 2,500 sold to Karuna at 1,000. So here the computer of the business, that is asset, and asset when we are selling, asset account is going to be credit, and Karuna is a taker of that computer. So Karuna is a receiver. So her account is going to be debit. Karuna account debit by 1000, and remaining is our loss on sale of computer account debit. To computer account. Here 1500 is our loss, and here 2500. Being the computer of rupees 2500 sold to Karuna at rupees 1000. So that was. Now let's see the next. If electricity bill of 1800 and telephone bill of 700 are formed, paid by check. So here we have paid the expense by check. So electricity expense account debit, telephone bill account debit to bank. That journal entry we are going to pass. Electricity expense account debit, then telephone bill expense account debit to bank account, and that will be 1800 and 700. So total will be 2500. Being electricity bill and telephone bill paid by check. So for that, now let's see the next, that is 29. Bank has credited 200 for interest. So bank interest we have received. In that situation we know that interest is our income. Interest account is going to be credit and bank account is going to be debit. So here for 29A, because there are two transactions in that. For the first transaction, bank account debit to bank interest account, and that is how much? So it is a 200. Being bank has credited interest of rupees 200, and now for next 29B, and in that we can see that bank has debited rupees 100 for bank charges. So bank charges is our expense. Bank charges account debit to bank account, and that is rupees 100. So that we are going to write 100. Being bank has debited rupees 100 for bank charge for that. Okay. Now let's see the 30 date. Goods of rupees 500 were stolen and rupees 200 was ruined in rain. So for that we can pass the combined journal entry as well as separate journal entry. Let's pass the combined journal entry. Loss due to theft account debit. Loss due to theft account debit. Loss due to rain account debit. To purchase account, and it will be, as we know, 500 and 200. goods of rupees 500. Goods of rupees 500 stolen, and goods of rupees 200 ruined due to rain. So for that. Now let's see the last transaction. And obtain a change of rupees 1000, but a currency note of rupees 100 was duplicated. Nothing can be realized. So we have discussed before that for this type of transaction, that is not recurring day to day, for that we have to keep one account. That account is called sundry expense account, and here we are going to debit sundry expense account, debit to cash account. That journal entry we are going to pass, and it is a loss. Okay, so that is also called sundry loss account, debit to cash account, and the amount will be 100 rupees. Being a currency note of rupees 100 was duplicate and nothing realized from that. From it. Okay, so for that. Okay, so here we are finished with all the transaction. Now we have to make the total of this. So here we have to make the total, and total of this will be 3,94,642. 3,94,642. So this is how we have to do the sum. Thank you students for watching this video.